the overall picture now is quite hawkish. The numbers so far for the second quarter, you're looking at Eurozone GDP growth of 0.4, maybe 0.5%. Depending on obviously on what happens next month. If you get another strong number, it's going to be a good quarter. But further out, there is this drag from manufacturing that will inevitably feed through to services. A lot of service sector activity is highly correlated with manufacturing. So it's a big question of just how long is this sort of household surge in spend going to last for? And we think with the hiking of interest rates that we've had, with the cost of living still remaining very elevated, and savings gradually being eroded, we're in for a weak spell as we go into next year. But it's the imminent recession risks certainly seem to have faded on the back of this stronger than anticipated upturn in service sector activity. But we just don't know how long that's going to last for.
Yeah, and it lasting that long then has maintained a sense of resilience in this economy. But, again, it's about how long that resilience kind of lasts for, right? Is this perhaps beyond just monetary policy now?
Is it beyond monetary policy? Well, obviously, if households are showing this resilience, there is scope for some fiscal policy to be tightened. There's a lot of stimulus in the form of the energy subsidies. That's falling out of the system now. So again, this is another reason why we think that the big surge we've got in the household sector will lose some momentum as we go through the year. I think that's a natural thing that's going to happen. And we're already seeing, if you look at the future expectations indices from these surveys, they've come down. They're down now below their long run averages. So sentiment about the year ahead is starting to wane. If you look at the new business inflows, especially in France, they're starting to cool as well. So there's a near stalling of new orders growth in May across manufacturing and services. Obviously, a lot of that's manufacturing, but even service sector growth is cooling there. So there are signs that this upturn is losing some momentum and it could fade as we go through the middle of the year. I think that's the most likely scenario, but we've been surprised before by this resilience of consumers. But I think the odds are you're going to see this cooling quite nicely, and that's going to please the ECB.
Chris, at the start of our conversation, you alluded to weakness in global trade as one of the key drivers for the weakness in the manufacturing sector. To what extent is that down to momentum in China fading?
China's obviously playing a big part of that, but it's more a symptom of the whole global inventory cycle moving. So this is evident across from the Americas, Europe and Asia. There's this unwinding of excess inventories. So whereas you had this big buildup of inventories, factories struggling to get supplies, bought everything they could, anything that was available, they stocked up on during the pandemic, built new warehouses. That is all unwinding now, acting as this big global drag. So again, the other question is, how long is this going to play out for? It should probably play out for another few months, but that then, of course, means that you could see some manufacturing sectors turn around later on this year as that inventory cycle starts to move in the other direction and firms start to rebuild stocks. So service sector looks like it will lose momentum as we go through the year. Manufacturing may, as we go through the second half of the year, start to turn around again. But that's what the big drag on global trade is at the moment, this big shift towards inventory reduction.